Welcome back. You're watching the ET Money Show. While the union budget steered clear of making any major moves to upset NRIs, it did announce several tweaks that could impact the way NRIs invest or earn from Indian assets. Let's welcome on board Anand Khanvilkar, head of NRI Business, IIFL Securities, to get a better understanding of how the budget will impact NRIs. Anand, hi, good evening, and welcome to the show. Minor tweakings, which were really introduced in the budget or announced in the budget. But before that, I just want to understand, why do you think the government clearly stayed away from making any major announcements, whether in favor or not, for NRIs?
So for understanding the fact that what has really changed or what has happened across over a period of time, NRIs have India has been a destination for investments for NRI for quite some time now. If you look at the overall figures, also in terms of remittances which have happened across, India has received around more than $100 billion, this in last financial year, which has gone up to more than 12% over and above the last financial year. And this is largely being contributed by a substantial amount of non-resident uh, Indian diaspora based overseas. More than 65% of this Indian diaspora today are out of top 14 countries are remitting this kind of money to India. And the larger element to this whole piece is also the fact that the rupee has depreciated over a period of time, and last year it has depreciated more than 10%, which is the reason which this surge of remittances has happened across in India. Do you account for the do you account for that matter that out of the select amount of money which is coming in India in terms of remittances, 50% and above would probably be land into domestic savings and family maintenance. A substantial amount of money is still going in investments, into markets or various assets. If you talk about, movement of these funds in different investments assets, larger component of this money is going to bank deposits today. Typically in terms of NRE and ROFC deposits held with public and private banks. So from a budget perspective, if you speak of why they have not made any changes, because of the fact that the remittances have been substantial. India has been lucrative in terms of growth because domestic growth is very strong in India in terms of multiple sectors. Profitability across corporate is good. There has been a transparency and ease of access to banks and capital markets, having a dedicated team of NRI, segments catering to the requirements. The most critical part of it is, the fact that the currency interest rate arbitrage and return arbitrage is the most critical thing to compare with as compared to what the NRI customers are getting in their in-country investment opportunity. And the larger portion is currently, even today, NRI investments in India, typically in banks where the larger amount of deposits are held, are tax-free. So from an element of budget, there was nothing to be done much in terms of investment to be looked out of, or certain kind of investment to be discount for taxes for that matter, I would say.
All right, so let's just talk about these minor tweaking which were announced, and then maybe you can help us understand this. Share issuance to NRIs above the fair market value now comes under the tax purview. So how can we understand this?
Fair market value in terms of customers basically are today also NRI customers are taxed at a the rate which is applicable for domestic customers. So there has been no per se change in terms of taxation from an NRI perspective, because short-term and long-term capital gain tax were applicable earlier as well. The same rate of taxation is also applicable even today, for that matter. So primarily there has been no change in terms of assessing the fair market value. They can always take the fair market value in terms of the indexation benefit also which they get across, and also the element of the grandfathering clause which they can also apply for that matter. Where they can also look at the current market price or the market price applicable as per the grandfathering clause is concerned. But the taxation aspect of this element was always there. The taxation which was applicable earlier in terms of short-term and long-term capital gain tax has remained the way it is.
And in talking about the relief that the NRIs are getting on TDS and tax filing front, please tell us what is it currently, and what is the kind of change that's been announced, and what's going to be the impact?
So, as I mentioned earlier, from a short-term and long-term perspective, the tax rates have remained the way it is. I mean, short-term capital gain tax is 15%, which comes to around post-tax around 17.94%. And long-term is around 10%, which would be around 11.96%, which remains as is. There is no change in that. They have been paying taxes, and banks have been deducting taxes at source on any kind of equity market or debt market transactions which the customers are doing today. And similarly, it is applicable for even PIS investments also, for that matter. Change which has happened across is typically in terms of debt mutual funds from a short-term perspective. The effective tax has slightly come down by around 2.5% to around 39%. From a equity mutual fund perspective, it has, from a short-term perspective, again the same implication has happened, where they will have to pay around 39% of tax on the short-term purpose. The same element will be applicable for AIS as well. There will be a benefit to the client in terms of whether the client has a tax residency certificate application for availing the double taxation avoidance agreement between the two countries. In that situation, tax on income distribution on mutual fund, they will get the benefit in case they are able to provide the TRC.
All right. Talking about the gifts and the kind of limit, I think 50,000 and above that would be deemed to arise in India. And what is the amount of tax that will be chargeable?
So they have mentioned the fact that the charges, the tax slab would remain the same as was applicable for NRI clients, or rather non-resident Indian clients. But they have also included the category of resident, but not ordinary resident into this category, where gifting been done from a NROR to a resident Indian, that is non-resident ordinary resident to a resident Indian, would be taxed in India going forward. So that's a change which has happened in this recent budget. Otherwise, the tax slab which is applicable on the gifts being given from NRIs to resident Indians remains the same.
All right. So that's all what was announced in the budget for NRIs. Thank you so much, Anand, for being on the show and explaining this to our viewers.
Thanks.
And on that note, we take a quick break.